In Forex trading, currencies are traded in pairs. Here's a quick overview of the three main types: major, minor, and exotic pairs. Major pairs involve the most traded currencies in the world, paired with the US dollar. Examples include euro to US dollar to Japanese yen, and pound sterling to US dollar. Major pairs are known for their high liquidity and lower volatility, making them ideal for most traders. Minor pairs are currency pairs that do not include the US dollar but involve other major currencies. Examples are euro to pound sterling, Australian dollar to Japanese yen, and pound sterling to Canadian dollar. Minor pairs have lower liquidity compared to majors but can still offer good trading opportunities. Exotic pairs consist of one major currency paired with a currency from an emerging or smaller economy. Examples include USD/TRY, US dollar/Turkish lira, and Euro/ZAR, Euro/South African rand. Exotic pairs tend to have higher volatility and wider spreads, presenting both risks and opportunities. Understanding these pairs can help you make more informed trading decisions. Happy trading!